Hello, welcome to Markets with Megan. I am the Chief Investment Officer of Verdence Capital Advisors. And today we're going to talk about the jobs report that came out this morning. It's the monthly jobs report, tends to always be a market moving event. And we've seen that today with the equity markets rallying quite strongly. Now let's unpack the report. There's some mixed reviews, I guess you could say, about the report. We did add, the U.S. economy added a significant amount more jobs than was anticipated. But the unemployment rate started to tick higher. Not only did the unemployment rate tick higher, but we saw the work week, the number of hours in the work week, that tick lower. That's important because typically companies cut the numbers of hours that their employees work before they then cut employees. And we also saw the average hourly earnings start to moderate, and that's important for the Federal Reserve because wage inflation is a very sticky part of inflation that the Fed is trying to get under control. So the markets rallied on the fact that those three things that I mentioned may keep the Fed on hold in June. They may hike one more time at some point this summer, but the markets are looking for the Fed on hold. I would be very careful about taking this as a really positive report because that's what I think the headlines will tell you, because the employment market typically is a lagging indicator, and we've known that. There's a lot of other leading indicators, and including layoffs that we've been hearing a lot in this earnings season that we think will start showing up in these employment numbers as we move through the year. So hasn't changed our view that the economy is still in trouble. We're looking for a recession in the second half of this year. And we're very cautious from an equity standpoint, especially after we've seen such a big pop on a number that, in our opinion, doesn't really bode that well for the economy. That's all I've got today. Tune in next time. We'll unpack some more of the economic data that we get. And if you have any questions or comments or ideas, please feel free to reach out to podcast@verdence.com.